Hey, good day, swing traders. Dennis Wilburn, the active trend trader. Hey, I've got two reasons why you want to watch this video all the way to the end. One is I'm going to show you how to use weekly charts and moving averages to have higher probability entries. And then number two, I'm going to show you a stock and ETF and give you the precise levels where I'm planning my trades. But first, take a look up in that corner and you will see a drop down and show you how to join the AutoPilot Trading Service. Take a test flight for 3 months and see how it fits for you. I know our AutoPilot Trading Service so far this year is beating the S&P, up almost 20% over the S&P. So with no further ado, let's go ahead and jump into today's. Okay, hey guys, so let's take a look at the S&P. As we see, the S&P has in fact broken out above this downtrend line that had been following for quite some time. We are now in the process of breaking out above this high. So we have a higher low and now a higher high. Where are price actions coming to? Right up into the 50-day moving average. Now are we going to press through that, and then where's its next level of potential resistance? Well, up here at the 200-day moving average. You have to remember, price actions are still below the 200-day moving average. So positives for the S&P is that we are breaking out. I would look for a potential pullback into the uptrend or downtrend line, because oftentimes what you'll get the next day or a few days later, you'll get a pullback towards the downtrending line or the trend line to kiss the trend goodbye, and then away it goes from there. So that would not be unusual to see that. We also need to have a break above the 50-day moving average and a close above that to put the new uptrend that is designated on the IB Investor Business Daily. Basically says a confirmed rally attempt, and the market is in confirmed uptrend. So that's what we're looking at there. What we're seeing over here on the weekly chart. Now, again, the weekly is not totally complete, but if it were to complete as of right now, we'd have close to a bullish engulfing, and all of the momentum indicators are turning back up. So that is very positive for the index. The NASDAQ, the Qs. I like what the Qs are doing. It's actually further away from its 200-day moving average, which is up here at the 367 level. We are basically building up. We broke above the 20-day. We're at the 34. We're slightly below the 50. And so I would look something very similar, a pullback towards the trend line, and then a bounce from there to kiss the trend goodbye. That would be where I'd be looking at potential trade on the Qs through a option position or trading TQQQ. Russell I like actually better than all the other indexes, in that it is also breaking out above this past high here. We have a new fledgling uptrend underway. We're breaking above the 50-day moving average. The 200 is all the way up here. So if we were to move from where we are right now up to the 200, well, that's about a 7% move. Take that over to the TNA for a similar type situation from where it's breaking out now. We're up that would be about a 30% move, which is very, very positive. And so, well, that's a good sign. I'm just looking at, and there's the bell. So something triggered off one of my alerts just before. So what I'm looking at, and I will look to trade TNA, and I'm just going to throw this out. I would be looking at TNA for a pullback back to about $60.65. This is the first tip I'll be basically providing you on where I would like to play this. One of the cool things about the leverage ETFs now is they also have weekly options. And in reality, an at-the-money weekly option is, if you're just learning how to trade options, an at-the-money weekly option that's maybe 2 to 3 weeks out is going to be a lot less than an at-the-money weekly option on IWM, which is up about $200. So again, I don't want you to buy because it's cheap, but it could provide another way to learn how to trade options. And they've got fairly good open interest on it. So again, I'm looking for a pullback. I would say if I get a pullback back to $60.80, which is just, or I could go all the way back to $60.26. That is where the trend line is. That would be my, so I'm going to go with $60.65 for my potential entry on TQQ. Where would my stop loss be? I'm glad you asked, because I would basically just take it right back down. If it fell below today's low by 10 cents, I would be out of the trade. Now, why is that? Because you say, well, Dennis, that's kind of tight. Well, the fact of the matter is, though, yes, that is a tight stop. But if we are going into a new uptrend, we should not revisit the low from today. Can it do that and still go back in an uptrend? Sure it can. But it's a lower probability that it's going to basically break out of today's low. And so, but we do want to watch it. Things look very positive for this entity in that TSI on the weekly chart is breaking up. We had a 2-line cluster last week on this, and look what's going on with the MACD. When the MACD, it hasn't crossed up totally yet, but if we finish around where we are today, tomorrow, that's a very positive sign for the uptrend to move and take back off on TNA. Now that the Fed is raising rates, it will provide, I won't say some stability for the small caps, but it will provide some certainty of what's going to be going on with the small caps, and so they can build off of that. So I like TNA. So that's number one, folks. Number two is, actually, I'm going to give you three. I want to show you what goes on with a leverage versus a non-leverage ETF. This is the semiconductor ETF. It has pulled up. It also broke out today, very similar to what? To the, it looks a lot like the NASDAQ. So it broke out. However, if we go over here and look at the 3-time leverage of the SOXL, which is also a very powerful ETF, look, if it broke out, it was just barely. So this is one of those things. This is due to contango and backwardation in that the entities that they have to purchase to meet a 3 times daily move of the semis it basically loses its value a little bit faster than the regular non-leverage ETFs. And so you don't get quite as big a move. And so notice that on SOXO. So which chart do we want to go and make our best technical analysis on? Go to the SMH, which is the non-leveraged SMH, and then make your technical analysis here, and then convert that over to trade off of SOXL if that's what you desire to do. So I just wanted to share that with you. So what's the other? I'll save the stock that I'm looking at for last. I want to show you one aspect of, and this is on tech. Now, tech has been doing a really nice job of we've got into tech last year down here about the $20.73 level, rode it up to 30, got into it again here, rode it up to about from 26 up to 34. So we've been making money on this. But what I want to highlight to you is ever since it's made the turn down here, look at the moving average it has been respecting. As you can see, it's either the 20 or the 20-week moving average, which corresponds to about the 100-day moving average, or the 8-day moving average, which corresponds roughly to somewhere between the 34 and the 50-day moving average. As you can see, as it started back up, it has hit that 8-period moving average, 8-week moving average, and bounced. 8-week, bounced. 8-week, or came close to it and bounced. So this past week, when we had this hanging man, which is a reversal signal, if you were going to place an order, where would you place it? Well, you could go down here and say, well, I would want to place it approximately where it's going to be this week. So how do you make that determination? And I'll just show you that really quick. As I go here and I call up the 8-week, which was at last week was at 35.84. 35.84. And then the week before that, it was the 8-day was at what? 34.42. And I'll just do the real quick math on that. And that gives me a trigger to get in at about 37.26. Where did the 8-week move today or this week? Well, as you can see, it went to 36.60. So placing a buy order to buy it at, and I think I did that right, the math right, yeah, 37.26 would have gotten you into a trade day before yesterday off the 34, and we would have been up to date. So again, what that provides you is a really great area saying, okay, if it gets down there and hits and turns, that's where I want to be in. Where would I put my stop loss? Well, your stop loss could be a couple of different places. One, no more than 5% below your target price to enter, or you could bounce over one candlestick, and as long as it's within 5%, and let's see where that would be on that one there. As long as it's within 5%, we can get it to snap in. As long as it's within 5%, you can see there, yeah, that's not quite, that's 6% or so. But we did have another line right there. Yeah, that's about 5.6%. So that's a little bit more. So I just use a straight 5%er to jump into the trade. Then once I did bottom out, then I could move my moving average up with that. So I just want to highlight this. It doesn't happen every time, but it does happen all the time. Find the weekly moving average that price action is respecting. You see over here, we had 1, 2, 3, 4, 5 weeks in a row. Came down, hit off the 20-week moving average. Well, that sure beats, it saves you a little bit to basically, rather than just buy it at the end of the day, put in a conditional order the next day to buy it right there at the 20. Now, speaking of which, our buddy Tesla, and then we will conclude with this, our buddy Tesla has, in fact, is in the process of doing a very nice move up. As you see here on the daily chart, we have broken above the downtrend line. We still have to break out of this, above this level right here, which is the old swing high. But if it follows through with the way the rest of the market's doing, it should do that. It is regaining the 200-day moving average. So what do we want to do on Tesla? What we could do is just basically look for a pullback down to somewhere between 847 all the way down to maybe 840-ish, or just go over here and just take it all the way down to the, we could also get really close about the 820 level. That would be coming all the way to the trend line and kissing it goodbye. If it fails there, we're going to, again, keep your stop loss really tight. And like here, that's $20 below that. Well, on a big stock like Tesla, That's less than 3%. So again, that would be the ideal area where we would want to jump into Tesla. You could put in a conditional order again at the 8 and the 20, somewhere in between those two, and go ahead and say, hey, that's where I want to do some kind of an option trade or buy Tesla. If I bought here on Tesla at the 840 level, it'd be very simple. My stop loss would be just slightly below today's low. So I hope that helps, because basically my objective is to help you trade your way to wealth and freedom in less than 2 hours a week. And we do that through our AutoPilot Trading Service. If you want to know more about that, there'll be a link down in the comment section on YouTube that tells you exactly how to join the AutoPilot Trading Service. And again, take it for a test flight for 3 months. See if it fits your trading style. And also, again, it helps me achieve my objectives because trading your way to wealth and financial freedom in less than 2 hours a week is really great. That way, if you're over here in Hawaii, it lets you enjoy the beach a lot more. So, aloha. God bless everybody.